Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This intraday analysis video is for Friday, August 6th, 2010. Well folks, as you can see on the chart here in front of you, the markets are getting slammed lower today. And again, this is all on the back of the non-farm payrolls number coming out worse than expected, down 131,000. Now the general consensus estimate had been for a loss of about 60 to 100,000. It did come in sharply lower than that. Unemployment rate stayed the same at 9.5%. Initially, the markets gapped lower and then started to rally up. Now, why did they rally up? Basically, they rallied higher because as you looked into the unemployment numbers, what you started to see was that a lot of the layoffs were due to government. All right, the government laid off 202,000. So if you take 202,000 government layoffs, including 143,000 census workers, and you take that away from the 131,000 loss in jobs over the last month, you actually get a positive number. And the private sector did create those jobs. So overall, you had a little bit of a positive fit in there. However, again, the markets initially sold off sharply, then rallied back once they opened, and you can see the rally up here starting up. We went almost back towards the flat line, and then the big sellers came in. And there were a lot of keys to this big selling motion. Overall, I think the market got a little spooked in the middle of the day as we were coming into that late morning session. Notice the volume dying down here, and I thought this was very, very unique intraday. But what ended up happening here, folks, was as the volume died out, all of a sudden someone, probably an institution, at least that's what you have to believe, an institutional player ended up doing a block sell on the SPY or on the futures and really dumping the markets very quickly on very light volume. So no one else was trading, but all of a sudden here comes, a $250,000 or a $500,000, whatever, on the futures and so forth, and all of a sudden you see a major sell-off going on here. That basically triggered more and more sellers. All right, so there were a lot of different factors here, but overall, the major selling that came in did seem to come when an institutional player ended up dumping a large portion of contracts, and again, the markets got slammed down very, very sharply here in the middle or late morning session. Now, as we crashed lower, the markets again just ran through the double bottom right here where we opened. We just took out this next level of support and came all the way down to the 111 even number. Now, the 111 even number is a master level, and I've gone over this with my premium members in the Research Center in the nightly videos for a couple different reasons. This 110.95 level to 111 level, if you flip to the 60-minute, what you're going to see here is a major trend line. See this blue trend line sloping all the way up? That's that same level. So again, as I said in the nightly videos and to my premium members in the intraday stock chat, as you were coming into that level, that would be a short-term scalping opportunity. We did jump long. I got a fill of 110.95. By the way, the low of the day was 110.92, so 3 cents away from the low of the day, and I wrote it for about 30-cent gain on the upside on the SPY. Beautiful little trade there, and again, just knowing these levels will dictate profits in your pockets. That's how key it is, and again, that's in the intraday stock chat, but I gave that level out in the nightly video for a couple different reasons, mainly because this is your pivot point. Basically, if you have a cliff, this is your cliff right here. You're above the cliff or you're over the cliff falling. So watch that blue line. It's going to be extremely important in the coming days, coming weeks. We want to see whether or not it gets taken out. Right now, the markets are inching up a little bit more here. What I do want to point out here as well, which I do find fascinating, is that you see the markets, how they basically went to sleep after you got the initial dump. You jumped back up, and now you're just chopping sideways in a very tight pattern. That's classic Friday action. All right, so that's classic Friday action. We have to remember, as the markets again inch towards the mid-time day, noon or the 12 p.m. Eastern time frame, they're going to go to sleep. A lot of traders are still taking vacations with their families, going away early on the weekends, and again, they're heading out. And that's, again, yielding this sideways, very quiet action then in the rest of the afternoon session. I do expect the markets to go sideways to higher into the close. Now, you might say, well, why higher? We're down so much. What about the possibility of a future fall or another fall down? That's always a small possibility. But the lighter the volume, the more likely the markets will go sideways to higher. And just as I say that, you can see the markets are upticking here very, very nicely. So keep that in mind. I do think that is a little bit of a key here to expect into the afternoon session, that possibility of a little bit more sideways or upside action. Now, again, I'm not saying the markets are going to go back to the gap fill. It's not like we're going to go back to the positive side or even back towards the highs of the day. I don't see that happening. But I do think there is a chance of this market kind of inching just a little bit sideways to up in the remainder of the afternoon as volume gets lighter and lighter. All right. Now, the other key here, folks, that I think is important we need to discuss, which also led to a little bit of this fall, was Goldman Sachs. Goldman Sachs downgrading U.S. job or U.S. growth view, and I do think that is a key part as well. And again, that came out right around the time where we saw that institution dump, where that news was starting to leak out. It didn't necessarily get released to the market at that time, but was starting to leak out ahead of the game, and that oftentimes will happen. Is a certain key select individuals will get a hold of that data and be able to trade off of it or dump into it. And again, that's really probably what was the key cause here in the middle of the session, along with that institutional dumper. By the way, once that institutional dumped on the light volume, and you see how light the volume was right before that happened, that basically triggered a sell-off by a lot of stops getting taken out, and also a lot of other institutions saw that happening, and they said, uh-oh, we better get out too, and they're going to dump, and a lot of the retail investors as well, but that's not a big volume portion of the day as well. So again, the market getting hammered to the downside here, very, very impressive sell-off, and now again we are bouncing up. Just a little bit of a look at what the overall indexes are doing currently. We do see the Dow down about 125 points, NASDAQ down 28, and the S&P 500 down about 15. That's about 1.25% across the board. But again, the markets are slowly creeping up. Do keep a close eye on this market. Your resistance on the upside, if we want to talk a little bit about upside resistance, will be right here, this white trend line at 111.50. That'll be first resistance. Notice, by the way, the in spirit of bull flag pattern right here. Upward move here, sideways inside bars above the 20. That's an in spirit of bull flag, and you are seeing a little bit of an uptick on that right now in the early to mid-afternoon session. All right, now again, as I said, 111.50 is going to be your first resistance. If you get through that, look for this pivot double bottom low and this white trend line, both of these white trend lines now. That'll be your next spot. That's at 111.75. And those could be possibly both hit. It is possible that we will hit even the upper one, depending on what type of bounce we get. Goldman Sachs, again, trading slightly to the downside today. Chevron, by the way, beautiful short in the Research Center. If you were involved in the Research Center, and again, if you're involved in the Research Center and you have the Research Center for $49.99 a month, you're privy to everything listed under that Research Center, including the hot charts and alerts, and the Pro Trader watch list, and the nightly videos, and the daily market reports, all of that included. A couple days ago, talked about shorting Chevron and did short Chevron nicely in the money on today's drop. Notice Chevron down over $1 today, so great profits being had there on one of the swing trade shorts that we've done, and it just continues to flow, folks. Week after week, I don't care what the market does. It can be up, it can be down, it can be flat. There are going to be profits to have, not only on the swing trade side in the Research Center, but in the day trading chat room as well. So we'll just continue to make money, and those of you that are with us, we are happy to have you. Those that aren't, I suggest you join up. Talk to you soon. Take care.